Issue briefing of day 3 of the World Economic Forum annual meeting 2019. It's taken us a few days to get to the real heart of the matter, which is globalization and globalism. We've spent a lot of time in this cute, cozy room, you know, a long way from the confines of the Congress Center, where conversation tends to be more free and far-reaching. To get to this matter, we've covered a lot of issues: the global commons, terrorism, gene editing, and now we're getting to the economics, again, to the hardcore discussion around the future of globalization. You know all very well now that the theme of this meeting is about globalization 4.0. So we're going to try in this short half an hour to get to the bottom of what that means and whether we are approaching a new, structurally different form of global economic growth, or whether it is just a course correction in a longer running continuum. So joined, I'm delighted to say, by two absolutely brilliant experts, relatively new in their jobs, both of them, having joined in the past 12 months. On my immediate left, Laurence Boone, Chief Economist, the Organisation for Economic and Cooperation and Development, based in Paris. Gita, Gopinath, you are the Chief Economist also, this time of the International Monetary Fund, based in Washington, DC, also a young global leader here at the World Economic Forum. So we're going to try to keep this session as free-flowing as possible. I encourage as many questions. Hold your hands. It's a bit dark in here, but I should be able to see, even given my eyesight, if you put your hand up. I encourage as much interjection and disagreement as you feel comfortable with as well. So I've got every expectation this half hour will fly by very, very quickly. Gita, let's start with you, just to get the ball rolling. Obviously, the IMF started this meeting, in fact, with the Global Economic Outlook for 2019. So, to what degree are we looking at business as usual?
The outlook that we put out on Monday points to slowing global growth. We are not staring at a recession, but global growth has certainly come down, and we've revised our forecast downwards to a modest extent. Now, the factors that were behind the downward revision were a combination of things. There were one-off factors in certain countries, like in Germany. But there appears to be a general worsening of market sentiment that went into our forecast for 2019. And one of the reasons for the worsening of sentiment was tied very closely to trade tensions and to globalization and the ongoing discussions between the US and China. And the reason that became a bigger issue was that towards the end of 2018, we saw this intertwining of risks between the financial side and the trade side. Financial markets for most of 2018 seemed disconnected from trade tensions, but that ended towards the end of 2018. And so it's the combination of those two that kind of weighs in terms of risks going forward.
Trade also, I should also mention, featured very highly on our own global risk report, which we put out the week before the meeting. I believe 91% of respondents thought that they saw a worsening of trade and negative sentiment between major trading nations. Is this something which you expect to work itself out during the course of 2019, or are you expecting a protracted deteriorating circumstance?
I mean, I think it is absolutely imperative to resolve these trade tensions as quickly as possible, because it is weighing on the outlook, not just for the US and for China, but for all countries in the world, because they're all part of this very large global supply chain. So any increase in tension, I think, will trigger not just concerns about the real economy, but on the financial side. We hope that this will resolve itself very quickly. I think there is a general recognition that this is turning out to be costly. And when we looked at the trade numbers for much of 2018, there was a slowing of trade growth, but nothing jumped out as saying, well, this is a consequence of all the tariffs. But we did see some more of that towards the end. Because what happened initially was that in anticipation of tariffs, lots of firms were buying goods. And so we didn't see the negative effect on the numbers. But now we do see it, and it needs to be fixed quickly.
And you've been talking to lots of important people in the past couple of days here in Davos. Are you any more concerned or optimistic that there could be a swift resolution? So which way is the spirit of Davos taking this particular issue?
Right. I think the most important two people were not here. So I think it's going to come down to that. But I think there is what seemed like this could continue for longer and it would not have an effect on the world economy. I think there is a recognition that that's not the case.
Laurence, let's turn to you. You've also been fairly vocal in talking about the risks of a slowdown. What to you are the great challenge facing the global economy right now?
So I think we have similar forecasts, but perhaps let me add an angle, which is the political risk and the policy risk, which are associated with that. And there, it's an extension, in a way, of the US-China trade tension, but it's also Europe. And what we are seeing with the forthcoming Brexit and the way it will be done, what's the tension rising within the Eurozone, so Italy or France, and perhaps looking forward how difficult it seems to be to converge again among members of Eurozone countries. And these uncertainties, and Gita mentioned trade, when you look at the Brexit, for example, then investment growth for most of 2018 was 0. So that's a huge way on the outlook for growth, because it's obviously preventing investment growth and the jobs that go with it. And we have also some uncertainty regarding what will be the capacity of governments to actually put in place the reforms they need to do, but also if the slowdown was to happen faster than expected, how would they react? What monetary policy room is left in Europe? What fiscal policy? And how could they cooperate if something was happening?
Last year, there was a different mood here, I think it's fair to say. The sun was shining a little bit more. I mean, it actually wasn't, but it was in terms of the global economy. And the talk was mending the roof while the sun was shining. We had synchronized global growth 12 months ago, which we don't have right now. What kind of job did the major economies of the world do? How well did they take advantage of the positive prevailing conditions of a year ago?
So they don't usually. When you look across countries and periods, the reforms are easier in the first 2 years of the mandate. There's a political cycle. They usually are being pushed much faster when countries are in difficult situation. We've seen that with all the Eurozone countries who had programs. And they tend to do reform where there is the political impetus behind it. And I think, and we haven't talked about it yet, but the post-financial crisis legacy in terms of lack of revenue for the middle class, in terms of job losses with digitalization as well, because of hysteresis for the financial crisis, is not creating the political environment that help do the structural reforms. So there starts to be a shift in my view, which is super interesting for many countries, which is we usually look at the impact of structural reforms on GDP growth. And now what we do is we look at them on income distribution as well. So how each part of the distribution, the poor people, the middle class, are being impacted by these reforms. And you can think about privatization, you think about fiscal policy. And that helps because it gives a sense to politicians of where the difficulties are going to be. I'll give you, if I can, just one example. You take the diesel tax, which happened in France. When such a tax is put in place, usually you do something that's not raising revenues. And you take the case of Canada, British Columbia and Canada did that, so they increased the diesel tax. But at the same time, they reformed the income tax on households and corporates so that overall it will be revenue neutral and that the people at the bottom of the distribution actually were not affected by it. I think we need to move a lot more into that direction. And we were in a transition period where we didn't really, so that reform had slowed down.
It's a fascinating issue, which I'm sure we'll cover again. I had another session here 2 days ago with Guy Standing, and we were talking about the need for a global commons and a fund for the global commons. And his point was the very same one, that both France and Canada imposed a tax, and Canadians found that move popular. And of course in France it's an entirely different story because it was implemented in a different way. Let's quite quickly pause and see how many people want to ask questions because we don't have a lot of time here. Hands up please. Show anyone else? We'll try to do 2 or 3 at the same time. Okay, so gentleman here in the second row please, and then we'll go to the lady at the front. Could you remind us your name and where you're from please, sir?
Yes. My name is Michel Karras. I'm from Dutch NRC Handelsblad from Amsterdam. I have a question. There's a big discussion going on for several days about what's wrong with globalization, what the negative effects are. I was looking what kind of solutions or possible solutions you could offer. To
solutions to fix globalization. Okay, how long have we got here? Pass the microphone over to a few quick solutions. Okay.
Giuliana Ferreino, Corriere della Sera, Italy. On Monday, on the Outlook, the IMF signaled Italy as a global threat, and with all due respect, it sounded, how can Italy? And also, Mrs. Boone mentioned Italy and France and the tension as a potential threat. Can you actually elaborate a little bit how these two countries can be a threat to the...
It's a G7 economy. Right, maybe we should cover that one first and then move on to the kind of wider picture. So start local and move global. Gita, would you like to kick off on the Italy as a global threat?
I mean, the 2 main risks that we flagged were the trade tensions and any sudden worsening of financial conditions. I think those are the 2 main risks. And then we listed a few others that we thought were additional risks to the outlook. And we had, for China, we had, if the economy slowed faster than we expected, that was one. Brexit was the other one. The US shutdown was another one. And in that context, we also mentioned that in the case of Italy, there is still a concern about the health of the banking sector and the sovereign sector and the interconnections between the two. So I think we should put it in that context to kind of interpret where we put Italy in the picture.
So we haven't concerted each other, but we do talk to each other. And we actually, as you know, have published our economic outlook at the end of November, but we have the same, and it's no wonder, but because that's the way the world is, the same list of risks with the same type of priority. Let me add to what Gita was saying. So it's not, there are 2 concerns in my view, especially when we come to talk about this. One is a Eurozone concern. We have seen, and I'm sure in the Netherlands you have that as well, we have seen a slowdown in the capacity to consolidate the Eurozone, to complete the banking union, to talk about fiscal capacity, to really move forward with an agenda that was there a couple of years ago. And this is not particularly due to Italy or to France. I think it's a general, within Eurozone member, question that people are addressing on how they want to do it, and are they converging, and do they have the same economic ideas about what's needed for consolidating EMU. So that, to me, is a risk and not a threat. It's a risk in the sense that if something happens, will we have the dialogue that we need to actually address a euro issue. And then there are, I think, 2 different issues. One which is common to France, Italy, but also the UK and a number of countries, the rising discontent with globalization and digitalization, and we might talk about this later, but I think it's a factor that plays a role in the type of policies that are being implemented, which in the short term perhaps look good, but in general don't have great effect in the medium term. And the last thing is, if we go to Italy, what we have always said is the issue in Italy is productivity growth. It's the lack of growth. And there would be an issue with the debt sustainability if we didn't manage to actually elevate growth. Obviously, if the budget has been now negotiated with the EC, it's okay. The question to me, really deep at heart, is growth, and also how do you keep talented people in Italy and avoid the youth going away.
Okay, so let's seamlessly move on to the kind of more globalized issue of what is wrong with globalization, what needs fixing.
before we jump into what's wrong with globalization, of course, has many, many facets to it. There's trade, there's finance, there's climate, taxation. But I'm going to talk about the one that I think is more present at this point, which is on the trade side. So on the trade side, you know, we have to also recognize that we've had the biggest reduction in global poverty alongside this large amount of trade integration. But it has been costly. It has negatively affected some communities, and it's done so in a very, very prolonged, persistent way. I want to make 2 points on this because you asked about possible solutions. So the first thing is we should, of course, recognize the fact that even in an ideal world where we have the best of laws and the best of rules of play, trade integration does lead to winners and losers. I mean, that's just how it is. And that's exactly how it is for technology. So if we were talking here about technological innovation, it will be the exact same thing. There will be those who win because they have the better technology. There will be those who lose who are working with the old technology. So in the process of trying to create that perfect order, I think we should realize that there will never be that perfect order, which means that it has to be complemented with domestic policy, right? So then, so in terms of solutions, I'm going to make a couple of points. Which is that first on the domestic policy side, everybody came very late to the game in the sense that a recognition that trade was creating a lot of hardship for some people was something that didn't become an issue until it became really, really, really bad. In the very simple sense, which it was not just about people losing jobs, like I'm talking about the US now. In the US, it was not just about people losing jobs and losing wages, but it started affecting their health, the opioid epidemic. I mean, it got to a point when people were really, really suffering. And that's the first mistake. I think a solution will require that we see the problem, because we know it will happen, and deal with it immediately. And that would include giving people, you know, figuring out how people can move to sectors that actually have jobs. And it's not just about reskilling, but it's also going to be about how do you make it affordable for them to have housing in the new places, credit in the new places. So all of that matters. So that's one. And then the second is that it is not, right now the world trading system is not perfectly fair. And certainly we need to do something about that. So I think what the WTO does well is deal with the very kind of overt trade friction. So if there are issues with tariffs, there are issues with quotas, then there's a very clear dispute resolution system. The issues are what happens when this is happening within the border for countries. So this is about subsidies, it is about intellectual property rights. Is it then that is a bit of a much more difficult area. So I think if we want, in terms of a solution, I would say that would have to be addressed very clearly. So that there's a sense that this is all fair, and I'm not pointing to any country in particular. I'm just saying this is general. All countries in the world use industrial policy for their export sector. And then lastly, I mean, the new kind of world we live in, services is going to be a big part of it, and the old rules don't really work as easily with services. So I think that would be another area that has to be addressed.
Laurence, I need a couple of quick fixes from you before we move on to the next question.
Yeah, I think. First, I know it's not good for the debate, but I totally agree, and we share the same view. So let me try and add two angles. One, I think, is we shouldn't think that globalization can stop with digitalization, with migration, and with trade, as Gita mentioned. It will continue. Migration, the numbers are enormous, but just keep in mind that, for example, migrants have contributed to 65% of the increase in the labor force in the US, 92% of the increase in the labor force in EU 2 years ago. So it's there. And digitalization, which I think is changing trade, as we are seeing, it's creating new business model, it's putting into question the reallocation of firms with the consequences that Gita was alluding to. And one of the key things which we really have observed and which is a threat this time is the hollowing out of the middle skills job. We at the OECD have, and it's obviously, there are a lot of caveats, but have estimated that about 14% of people will lose their job because of automation in the next 5 to 10 years. It's about a third of the job that will totally change. We need to, one answer is really look at skills and different form of education than what we've done before, and a long lifetime, which I know it sounds like a mantra, but when you look at the figures, it doesn't happen. The second, I think, and Gita mentioned fairness and the level playing field. I think there's a huge thing to do, which is taxation, that global taxation become fair. We had one first step with BEPS and the automatic exchange of information, which actually make firms pay taxes where they produce, employ, and sell. It's an estimated 100 to 240 billion of tax revenue which have escaped the states. I think it's very important for people to see that these firms actually pay their fair share of taxes. And thanks to this system, I think states have collected about $93 billion already. And looking ahead, digitalization again will impact the way that people do business, and that will have an impact on the international tax system. So there are discussions at the global level and in global fora about how do we tax best, not necessarily the digital company, but all the companies given how digital is changing business. It's something that the G20 looked at, but not only. Hopefully that will deliver in a couple of years to make, I mean, we've seen individual initiative, but again, to make trade look fair. I think it's also all the other aspect of, business conduct, like it's anti-corruption, global convention that's sending also a strong signal. It's guiding how states actually do interact and how business interacts with states. There's the anti-bribery one. So we have a lot of instruments that we can use to make the globalization more fair. And then there's another, and I'll stop here, don't worry, technical, perhaps more technical subject, but which is competition needs to also assess how digitalization is changing things. That's the way firms use data, the way they use algorithm, the way they actually buy small competitors to absorb the new technology. So all
Thank you,
area of
Laurence.
work.
Amazing. And we'll try to sweep around those right before we close. 5 more minutes, just over, with two of the most exciting economists in international government. So I hope you've got questions. I can probably take 2. Sir, you're first, and then we'll move the microphone to this gentleman here.
Okay, Nicolas Barret, Les Echos, France. A quick question on China, on Chinese outlook. What is your anticipation on the fact that the Chinese leadership could take some more stimulus measures this year to boost growth in China?
Stimulus in China. And sir, please.
I'm Alessandro Panerai, Global Shaper. Given that the topic of this annual meeting is Globalization 4.0 and the need to restructure global cooperation, how do you think that your organizations should evolve in order to touch these issues and better address global risks?
Okay, maybe we'll start with China first, Gita, and then we can move on to a brief discussion of how your institutions should evolve in the future.
With China, we have seen that in response to the negative impact of the trade frictions, the government has put in more stimulus, and has done so both on the fiscal side and on the monetary side. So, taxes, cutting taxes for personal consumption, and cutting the reserve requirements to encourage lending. And we saw the most recent estimate for 2018 came in at 6.6%, which is exactly what we had in our outlook. Now, going forward, China will continue to slow some, but that is a path. That is just a reflection of the Chinese economy, the maturing of the Chinese economy. Now, what we would continue to hope is that these stimulus measures being taken, would be to respond to cyclical factors, any kind of cyclical declines in growth. But it is important that the Chinese economy continue to rebalance away from industry towards services, and that's exactly what it has been doing. And it's also important for it to continue with financial regulatory reform, that, while reducing credit growth, I think that is essential to keep debt levels at a sustainable point. So it's a question of using these stimulus tools for transitory shocks, but then the long-run picture has to be one of financial stabilization, rebalancing.
Anything to add?
Yeah, just adding, because I think, once again, sorry, we are live.
Next time you should start.
You're going first next time,
Laurence. Then I'd say the same way.
Let me add two things. One, I think, is that one of the risks for China, and Gita alluded to, but I will develop a little, is the debt and the debt level, and especially in the corporate sector, and especially in state-owned enterprises. If I'm not mistaken, the total corporate debt is about 160% of GDP, which is quite high. And we also know that because it has been used to stimulate short-term growth, not all of it is of 200% quality. And if there's a slowdown, it obviously has an impact on the capacity of firms to repay this debt. And that the fact that there's some stimulus and some pile-up of bad loan, I think, reflects a tension between what is the short-term willingness of the government to really stick to target, and the fact that in the medium term, because of demographics, because catch-up will be less fast, then trend growth in China is coming down, and we estimate that within 5 years, it will be around 4.5%. And the government has the very difficult exercise to strike the right balance between supporting growth so that it's a soft landing and trying to actually decelerate from 6.5 to 4 to 4.5. And that with a debt issue that it needs to solve. So I think that's the thing that I wanted to add. And it obviously has spillover for the rest of the world, because China lends to emerging markets and because countries like Germany export a lot to China.
My goodness, we're so short of time, but we do need to ask this question. I also want to get one in myself. Laurence, over to you for the fun question. Do you see any evolution in your own institution? Set up a long time ago, and the challenges the world faces now are much different.
So it's not fair that I get first the toughest question. But look, I think in the wake of the financial crisis, there's been a huge turnaround in the OECD, which was very focused on supply side reform and GDP growth and productivity, towards a narrative of inclusive growth that's moving away, that's expanding the type of variables we look at. And we now look not only at GDP, but employment, the quality, the divide between people, and other indicators very much in the road that was opened by Amartya Sen and Fitoussi some years ago. What I think is key for us is to continue support consensus and global assessment on all the principles and standards that actually make globalization more fair, as we were saying. And one is the tax, really the success of coming to a global agreement on how to tax digital business is important. I mean, digital in business. We've started. We plan to conclude by 2020. I hope next year we can say that it's being done. And it's the same with avoiding regulatory arbitrage, avoiding all the unfair practices, and that's for corruption, as I said, bribery, in terms of competition and digital, making the world a better place for everybody and not just for some people.
Gita.
So my chance to say I agree with you. To talk about my organization, I think it's very clear that the issues that we are dealing with at the IMF are a much broader set of topics than we used to historically. So we work very closely on inequality, we work on climate change, we work on labor force participation, and so these are just the fact that this portfolio has expanded is basically signaling a recognition that all of these factors are actually important for the big mandate of the fund, which is about macro financial stability, and that they feed in. and things move much faster on the ground than institutions move. But I think that there is a very strong response to it and a clear recognition that all of these things matter now, even at the frequencies that we care about. I think central banks are paying attention now to things like climate, natural disasters. It used to be the case that, monetary policy was about the next 2 years. You wouldn't think about consequences of climate change because that was a decadal phenomenon. You didn't really worry about that. But now it doesn't seem to be a decadal phenomenon. It's happening at a very high frequency. So the central banks are paying attention to it. Financial regulation of banks used to be, the so-called stress testing, used to be entirely about the economic outlook and growth, but now also includes trying to determine the resilience of banks to natural disasters, because again, that frequency is going on. Trade agreements that are being done now are putting in concerns about the climate. So for instance, the most recent EU-Japan trade agreement, I think for the first time, put in a commitment by all the signers that they will respect the Paris Agreement. So what does trade have to do with climate? I mean, I think everybody's just recognizing that these are all very interlinked, and so the solutions have to be interlinked too.
Laurence, you want to say something very briefly?
Yeah, I just wanted to add that another sign of change is I think our institutions are working together and articulating themselves a lot more than before to avoid duplication, but also to nourish and fuel our thinking and complement it.
You certainly agree on lots
Absolutely.
of areas. I do want you back next year, and so because of that, I want to give us all something to kind of measure you by and to kind of reflect upon. So we've gone through a whole raft of issues that we believe could be addressed: inequality, fixing digitalization, taxation, improving trade, reskilling, and the conduct of business. In 12 months' time, when we meet back here, hopefully, where do you think we'll see the most progress having been made? And Laurence, I'm happy to give you the question to redress the inequity of the earlier part of this session.
I think I would take two angles. One is I talked a lot about taxation because that's something the OECD is very involved into with the framework actually where about 100 countries have abided by to try and find a solution to global taxation. That includes even discussing, for example, I'm not saying it will happen, but discussions are very open, such as something like the minimum corporate income tax at the global level, which would be a massive change. So what I would like very much next year is to be able to tell you that we've reached a lot of progress on this. And the others, and I think from different angles, we both talked about it, but it's inequality and the issue raised by digitalization, and it has been a lot of the discussion here, and I think digitalization is challenging the rule of competition. We are just starting. There have been a lot of academic work on it. I think even at the OECD we've done a lot, but Gita has also done some. It would be great if we could design, and it's in the program of some of the global forum, for like the G20 and the G7, a new rule book for competition using data and algorithm, that we strike the balance between preserving data privacy but allowing business and making that work for everybody.
Wonderful. Gita?
Well, I guess the number one thing I would hope is in 12 months, we have more trade agreements. We have less differences that way. I mean, this is the current biggest concern at this point, and I hope in 12 months we have not just a resolution, but a long-lasting resolution. So I think one of the biggest issues for the world economy right now is uncertainty. And that's weighing on investment, it's weighing on the outlook going forward. And so I would hope that when we sit here, and if we do in a year from now, that it will be to say that, okay, at least that's off the table.
You're invited next year. Get that, clear that one up straight away. Thank you so much. We've gone over and I've risked the wrath of the Swiss timekeeping gods, but I hope you don't mind and indulge me for that one, but I think it's been a fascinating conversation. I thank you both very much for joining us. I thank you all for joining us here in the room and for watching us live online at newforum.org.
Thank you.
Thank you. Yeah, sure, absolutely.